Oh,
sweating?
beautiful, mate. Absolutely. I mean, the summer's been incredible this year. It's been so nice. So, yeah, like you, mate, can't complain. Certainly
It's
not.
all right if you're living on the beach and you got some nice sea breeze coming in your window. The people in London wouldn't agree with you, I don't think.
No, they wouldn't. Anyway, mate, let's get to the data now. Interesting, sort of like hearing that conversation with Lexi, and you and I know from looking at the markets on a weekly basis that it's been a bit surprising. What's really happened over the last few weeks with some of the data kind of suggesting that we would see some the rally kind of going on. The fact that we get sort of slightly better inflation data and the equities start to rally, so risk comes back on the table. Bit of a shocker when you sort of realise that inflation is still at 8.5%.
Yes,
Whether the market kind of like wakes up from its euphoria this week, or whether it continues, is the big question. And we were just talking about the yen there. The yen's a really interesting one. So let's have a quick look at what
sure.
the seasonal data says to start with, because really, with the risk on attitude, you would not want to trade the yen by any stretch. You wouldn't want to be trading the yen long. But if we look at the seasonals, look at this. Now I'm going to show you all of them to start with. Swiss franc. Now this is the August to September month, relatively flat against the dollar. New Zealand dollar, weaker against the dollar. Japanese yen, stronger against the dollar. Mexican peso will miss. Euro, weaker against the dollar. The pound again is a little bit up and down. Canadian dollar is relatively flat, and the Aussie is also weaker against the dollar. So really, we're looking at yen's strength and potentially euro weakness. Now, if we have a look at that, see what that looks. See what that looks like with a euro yen cross. Then what we get is the euro as weak as this is August here. Euro much weaker against the yen. Sorry, I can see that my screen's taking a little while to kind of catch up with you. So this is the euro, much weaker against the yen. So you can see that the August month there, and the way that the chart is going. Now, the reason I'm bringing that up is that if we look at the COT data against and we compare the COT data from the yen to the euro, what we see here is these are the non-commercials, and the non-commercials tend to have kind of tied to stop, so they tend to be better at predicting when the market's turning. Look at what we're starting to see. This is the net position. Now, the net position is the best it's been. It's still not net long, but it's the best it's been on the yen all year. We're starting to see sort of like positions start to come back in. We're starting to see, the COT data start to come back in for the yen. And if we compare that against the euro, let's blow this chart up a little bit, then we can see that, okay, it's improving a little bit, but we're still really in negative territory. So that does sort of like pair the yen against the euro quite well. It does actually pair it, if we look at the Aussie, because that was one of the other ones that was weak, look at that with the Aussie as well. Now, this is really interesting because the Aussie yen was also seasonally short, and we do actually see sort of like weakness stepping into the play with the Aussie. If we were to kind of bring in the chart and we were to think about the Aussie yen on the chart, look at the chart on the Aussie yen. Very close to resistance point here, if not right on top of it. So there is a case to be made to say that this could well turn around. The issue is the risk on, risk off that we've got. So we've had risk on all week, for the last few days, actually. Last few weeks, we've had risk on. NASDAQ coming back, S&P coming back, FTSE coming back. So the indices are coming back, suggesting that we're not really in a risk off attitude. But this is suggesting that we should wait and see whether that might turn around. The difference with the Aussie yen and the euro yen is that the euro yen is actually trending lower, and it does actually have some resistance point here. It might pop a little bit to start with, but it does suggest that there is some downside to come on the euro yen. So I'm actually on the flip position where And it pains me to say, because why you'd buy the yen, I don't know fundamentally, except for the fact that central banks may be not pivoting positions, but easing back on their monetary stance. So they're not going to aggressively raise rates as much as they have been. Inflation starts to come down. Does that encourage the Eurozone to put the brakes on what they were doing as well? Lexi quite rightly pointed out, the Euro economy is in all sorts of trouble. They don't want to raise interest rates. They can't really. So if they're not going to do that, does the yen's valuation catch up by default with one not moving and the other one staying really where they were already? So euro yen short is an option. Aussie yen short, but we do need to see that risk off come back into the market before we take that position. So cotton seasonal suggests yen long, cotton seasonal suggests Aussie short and euro short. And it's kind of pick your poison for which one you'd go for. I would personally plump for the euro yen short out of the two until I saw risk off come back into the market. And we need a driver, and it's not there yet.
And of course, the other thing, Ash, with the yen is they just can't sell it off forever. That doesn't happen. Markets don't work that way.
No, absolutely right, mate. And I guess this is the point: is that even though the fundamentals are weak for the yen, aren't particularly strong for the yen, and we know the central bank isn't moving, that valuation can actually come back into play by default with the other central banks moving back towards where the yen position is, which is not easing necessarily, but certainly not tightening at quite the same rate. And the euro, okay, started a little bit of tightening, but can it keep going further? I mean, we got this big problem right now in Germany with the river just evaporating. So they can't get the energy that they need, the coal that they need to get. They can't use the autobahn. They can't use the trains because they're already full with goods already. So they need the river to kind of transport the goods up the river, and they can't do that because it's just not deep enough. So that compounds again the problem that they got with energy. So the Eurozone is in all sorts of trouble, and for that reason, as I say, they might come back into line. And realize that they can't continue to raise interest rates because the economy is in a mess, whereas the Japanese economy is bubbling along okay with their particular monetary policy position.
All right, well, we can focus on that particular scenario as the week progresses, I suppose. So you've given your positions for the week. So too, of course, has Lexi. Let's see how they pan out. Mate, I'll catch you tomorrow, right?
You certainly will, mate. Yeah, bright and early. I'll see you at 5 to 8 UK time.
You don't be late, right?
Don't be late.
Okay. Well, thanks to Ash. As usual, we have a little bit of fun there. Talking about tomorrow, of course, Ash and I do it every Monday and Thursday at that time, 5 to 8. That, of course, is 5 minutes before London opens. All right, we're going to go back to Singapore now.